Thursday. That means it's time to look at some legacy charts. It's funny when you actually say the term legacy to people who've been trading this stuff their entire life. They laugh. They look at you a little weird. But to us crypto people, this legacy stuff is just that. Old hat. Really the story, though, has been the correlations, the high correlations between all the legacy stuff I'm about to show since January. The inverse correlation with the Dixie dollar index, US dollar index. The extremely high correlation with gold. The high positive correlation with gold, high positive correlation with SPX and Nasdaq. That story has changed in recent weeks in that all the correlations are waning, or the duration of those correlations are decreasing on the decline, which ultimately is a good thing because we want Bitcoin, the non-legacy stuff, to go to the beat of its own drum. We want decoupled price action. We don't want Bitcoin governed by what's going on with the SPX. That's just end of story. It's nice that we are somewhat correlated with gold, which is viewed as a store of value asset. So there's some nice investing metaphors there. But at the end of the day, I personally would prefer, this correlation where there is none, right? It's some days it's correlated, some days it's not. Here's the rolling 30-day correlations between SPX and Nasdaq. You can see at the beginning of the year, we were just, for better or for worse, completely tied to the Nasdaq. Interestingly, though, over the past few weeks, as BTC is just on this rocket ship to who knows where, these correlations are definitely less than they were. The duration is less clean, which is good because SPX and Nasdaq, as I'm about to show, are a bit toppy, a bit in consolidation decision-making mode, whereas BTC is far from that, right? There's clearly a strong bullish rally going on right now. And even with Dixie's even in consolidation mode, as is gold. Gold's actually looking like it's ready to roll over. I'll show that in a second. But something else that's always been important for BTC is the VIX, the volatility index, the fear index. When the VIX spikes, BTC drops. That's just how it's been historically. And along with that, any spikes in the VIX have been excellent buying opportunities. Maybe the best buying opportunity of them all was the spike down in March. And we can see VIX hit basically an all-time high, effectively. Massive spike down. And it's been nothing but up for BTC ever since then. So this whole dynamic of fear in markets selling, just look at November 2018 as well. This isn't like a one-time deal. Any of the big spikes down for BTC have correlated roughly pretty well with spikes in the VIX. So we're still coupled with legacy, whether we like it or not, in that regard. But what I want to see going forward in the next weeks, months, into January, February, March, Q2 2021, is VIX declining below 20. There was some argument that we wouldn't get VIX below 20 without a coronavirus vaccine. It's looking like that vaccine is getting closer and closer to being a reality. So if that's the case, BTC should do extremely well. It's a bit odd, actually, that BTC has done as well as it has with VIX as high as it has. Kind of a bit of a decoupling story of its own there. And all this stuff is relevant because if the correlations are high, like they were, you can't ignore gold. You can't ignore the Dixie. You can't ignore SPX and Nasdaq. You can't ignore the VIX if you're trying to take big positions in BTC or ETH. So if you look at SPX, a few people on Twitter were talking about the potential of a bearish divergence here. Higher high in price, lower high in momentum oscillators. This is %B on the bottom. You can see it a little clearer when compared to RSI, but I wouldn't say there's a compelling case for bullish continuation here for SPX. It's a bit of a mess. It's extremely tied to stimulus talks and coronavirus. It's just ultra sensitive to all that stuff, while at the same time being decoupled from reality in the US, in that stocks have recovered and then some, whereas the people living here have not, are far from it. So it's kind of just this odd non-reality of stocks are great, everything's booming, and people down here aren't doing so hot. So there's definitely a divergence from reality in that respect. But if this does go higher, it looks like it wants 42 to 4,500 based on Fibonacci extensions, and this would be likely related to any stimulus that gets passed in 2021. Nasdaq a bit more of the same. We get the same W fractal. Trend is a bit flat on the cloud here, but it's outperformed the SPX even. There's been some rotation out of SPX into Nasdaq, Russell 2000 type stuff, out of the tech sector, as the coronavirus stuff looks to be waning slightly. Maybe not the numbers, but the inevitability of the end of coronavirus, maybe, in the US. But I still think we have a long ways to go. Interesting here that there was always also a hidden bull div with a lower low in oscillators here and a higher low in RSI. Definitely a bull div here as well for people who are still trying to figure out what divs are and practicing what divs look like. Definitely a bullish divergence on the way down in RSI and %B. I really like %B. I don't think it gets used enough just because it tends to exaggerate any of the divergences in a good way. It makes them more apparent. But SPX and Nasdaq both look a bit nonplussed on the trend metrics. Dixie is now looking like it's ready for bearish continuation, which is probably the most bullish thing for Bitcoin. The death of the dollar, the weakness of the dollar, should be incredibly bullish for crypto, because at some point people are going to start rotating out of the dollar, right? As they already have, many of us already have, into alternative assets. So what we're seeing on the cloud is bear trend, reconsolidation, attempts at reversal, all denied. And although the trend is still flat, the cloud is showing, forecasting, bearish continuation. Especially if we get any lower lows below 92, 88 should be an inevitability in that that's the next support down. There's really not a lot of price history until 88. Even back into like 04, 05. This is the weekly chart. There's just nothing down there. Maybe at 91 at this low. But if this whole thing turns into an M double top and we start to see 2007 to 2014 style lows in Dixie, the possibilities for BTC here are triple digits, easy. I mean, the weakness that's potentially being thrust upon us in the next few years of the dollar would be incredibly bullish for BTC. Here's gold. Again, if you look at just in a vacuum, trend metrics for gold are neutral to bearish as it gets its bearish Kumo breakup below the cloud. It's still got a lot of metrics to flip before this is 100% bearish, and thus far since 2019, it's actually held all of the bull trend. So if you're bullish on gold, what you want to see here is a break back above the cloud. Arguably a falling wedge here, which is a reversal sign in this case for bullish continuation. Similar to here, very similar to here. But you're really not confident until, very similar to here as well, falling wedge. This is the entry. This is the entry. This is the entry as far as the long side of that trade. Right now, there's no long trade here for me based on trend metrics on the daily. Then lastly, just looking at silver again. Silver also showing heavy retrace potential. I mean, silver's run up early 2020 to mid 2020 was kind of insane. So it's looking like 21 as far as a 50% retrace there. So overall, everything's kind of in limbo. Maybe this is in alignment with indecision in transfer of power in the US presidency, indecision in the stimulus, indecision in lockdowns coming into American holidays, people just generally being fed up with coronavirus stuff. Just enough is enough. I think a lot of people are in that boat. So I think any bullishness in SPX and Nasdaq into 2021 will be more so related to the death of the dollar than coronavirus stuff resetting, vaccine stuff. I think the most potent drug for legacy markets is stimulus, the Fed, what goes on with inflation. So 2021 is shipping up to be quite a year potentially for Bitcoin if Dixie breaks 288 and even further down below 88.